Hello, everyone. For those of you that are new to me, I know we have a lot of new faces. A quick introduction. My name is Sheree Marie, and I am a life insurance strategy consultant. After evaluating insurance claims for nearly a decade, I found that nearly 80% of all claims are delayed or denied for one reason or another. And to be honest, the root cause of that is simply due to the lack of education. And so my goal is to provide you with some best practices and strategies to help ensure that your insurance claim is paid out just as you anticipated. So today I really want to talk about another benefit that most people are not aware of. It is called accelerated death benefit. It's also known as ADB, accelerated death benefit. And what this is a benefit that is automatically embedded into the coverage that you currently have if it is an option for your carrier. And it simply allows you to use some of your life insurance money if you are unfortunately diagnosed with a terminal illness. So if this is, sometimes it can be chronic too, but if it is a terminal illness and you have been given 12, 24, 18 months to live, with proof, of course, that documentation, you can present that to your insurance carrier and then inquire about your accelerated death benefit. And so that coverage you are actually allowed to take from your life insurance. And so say you have $100,000 policy, you could possibly take 25 up to 95% of that coverage as an accelerated death benefit. And so one would ask, why would you do that? What could you use it for? The intent is to pay for your final affairs, right? It's your life insurance. But, people use it for a variety of reasons. When I paid life insurance claims, and I have paid millions in accelerated benefits over the years, one of the big reasons that people would take that money is to do, some, what do you call it? Like, do further research, do, trials that they would go through to see if they could find a cure, because those treatments are very expensive. So trial treatments, they would pay for medical bills because a lot of people that have terminal illnesses, insurance does not cover the treatment. And so even if you are still getting treatment in a physical hospital, you're not doing any trials or anything, but those have high price tags. And so people want to pay their medical bills. People want to continue getting the treatment and things like that. Another big one is people would want to take their final family vacations. They would want to do something big with their family and loved ones. A lot of times it was large groups of people going at once. They would go on cruises, they would go on vacations because they just wanted to, make this one last memorable trip with their loved ones. And so you can do that as well. But honestly, there's no limitations on what the money can be used for. It's entirely up to you. Once the cut is checked to you, you can do whatever it is that you want to. Trial studies, that's the word that I was thinking of earlier. They would do trial studies. And so you might think, like, what are some drawbacks to this? Like, is this too good to be true? And one of the biggest drawbacks is that now your life insurance is less than you anticipated, right? Now that $100,000 policy quickly became, a $10,000 policy. And so you have to consider, okay, when my time does come, how will my family pay for final affairs? What is that going to look like? Some people actually would take this money and pre-plan their funeral as well. So then that was something their family did not have to worry about. Funeral homes welcome you to come in to make your own arrangements, to pay for things in full. That's definitely an option. And so if you are okay with that, if you're choosing to do that, and then that means that just because 95% of their policy is gone, it means nothing. It just becomes a bonus at that point because you've already handled everything that your family would have taken care of on your behalf. And so that is an option. You're well knowing that's an option, but also knowing that one of the drawbacks is that your life insurance is not less. Another drawback is there are tax implications. Now, this does vary state to state, but typically, life insurance, there are no taxes taken. And so the benefit is when somebody passes away, you can easily get multiple five figures, even a six-figure check, depending on what the amount was, and that be tax-free money for you. You don't have to claim that as income. No taxes are deducted from that. That is your money. When you do an accelerated death benefit, there can be tax implications. Another drawback is some companies can actually charge you fees for those. And so you have to it kind of reminds me of when somebody withdraws from their 401k. If you are under whatever the age is, there are tax implications. There are, there's multiple deductions. So the same rules apply when you are withdrawing from your life insurance early, while you are still living. And so a lot of people don't know about this benefit. Most people don't learn about it until, unfortunately, they become faced with the terminal illness, and then they're made aware of all these additional benefits and resources that may be available to them. But just like everything else that I've shared with you all, it is right in your policy. All you have to do is open it and read it, and you will learn everything that's included. They really don't hide things from you. It could be hidden in plain sight because you haven't taken the time to actually read your policy in its entirety. And I know it can be overwhelming. It's several dozen pages. But one story that I love to share is years ago, I worked in retail, and we had to sign some we had to sign some document, and I was reading through the document, and someone said to me, I think it was one of the managers, she said, I really appreciate you taking the time to read this because everyone else has just kind of signed this and went about their way and they have no idea what they're signing. And she shared a story with me, and she said her and her husband were going to buy a house, and they picked out their house. They loved it. They were super excited, and they went to their closing in a moving truck because they were prepared to just move right in. They had their stuff already packed and ready. And when they sat down at the closing table, they read through their deed, and they learned that there was a new interest rate added to that they did not agree upon. And when they asked about it, they were advised that this was the interest rate that was selected. This is final, and they needed to sign this document in order to move into their home. And they made the difficult decision to pass. And they passed on that because that interest rate was going to almost double their mortgage payment. And even though they were super upset, they just knew that wasn't the financial decision they wanted to make at that time. They had agreed upon an amount that was set in stone for them. And so they walked away from a beautiful home. But that just goes to show the importance of reading the documentation before you sign it, or even if you don't have to sign it, because you don't have to sign policies, but know what you're getting into. Because what that does is it educates you, and it allows you to provide education for your beneficiaries. It's really like, as a parent, it is your responsibility to protect your child. And, they can't read yet. They can't understand and comprehend things on an adult level. And so you take the place of that. As a policyholder, your beneficiary can't understand and comprehend what's in your policy. They don't even know what's in your policy, right? And I've spoken to so many beneficiaries who were just like, it's one side of the spectrum. It's like, my mom or dad would have never agreed to that. They would have never signed up for something like this. And the other side of the spectrum is, I don't believe my parents had a clue what they signed up for. And both can be true. But it falls back on you. It falls back on the policyholder. It falls back on the person who had the coverage but failed to read it and educate their beneficiaries. But that's okay, because that's where I come in. So make sure you subscribe to this channel so that you never miss another update, because ultimately the goal is to make sure you're prepared. The goal is to help you put a plan in place to make sure your family is ready when the time comes. Have an amazing day, guys. Take care.